Hey, welcome back. Today is February 1st, Monday, and on this post I'll be telling you about the overall crypto markets very quickly, which includes Bitcoin dominance and Bitcoin price action, and see how it could potentially affect the altcoin markets, generally speaking, before diving into Loopring, LRCUSD, and see what exactly has gone on in this market since the last time I've spoken. I'll be telling you about the bullish and bearish case scenarios for today, as well as the short-term price prediction on this market according to what I'm seeing on the charts. Before I begin today, if you guys are watching me on YouTube, do subscribe. If you guys are watching me on TradingView, do follow me, as I'll be keeping updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you guys do want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 4 free stocks as of today upon a successful sign-up and a qualifying deposit of $100 and I will also receive a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor, and this is not financial advice. I'm purely sharing my own speculative opinions on this market. I cannot tell you the future, and you should always do your own due diligence before trading or investing in this market, as it's extremely risky and volatile. If you guys have any questions or comments, please do only leave them in the comment section below, but I'll try my best to get to as many of them as possible. Now, see what exactly is going on in this market. First, most importantly, I do take a look into Bitcoin dominance. Tells me where the money could be trending into. Would it be Bitcoin, altcoins, or neither? Currently, we do have Bitcoin dominance up just slightly from yesterday, and we do see Bitcoin price action up almost 2%. Total altcoin market cap up about 1.5%. So both of them are kind of side by side gaining today. Bitcoin price up, Bitcoin dominance here, that's why no change. But if Bitcoin dominance actually breaks this daily 200 MA, which I have been saying for the past couple of days as key support, I would expect Bitcoin dominance to continue trending downwards in the short-term future. In this case, I would expect better price action for the altcoins, both on the upside and downside, generally speaking, as opposed to if Bitcoin dominance was trending upwards. Okay, so this is still what I'm focusing on the daily time frame here. On the macro level, Bitcoin price action here is still running within a very tight range, very ideal, in my opinion, for the altcoin price action, because if Bitcoin price action has less room to run, hence it's running within a tighter range, it has less room to dump as far as this pattern stays intact. So this, in my opinion, is very ideal for the altcoin price action here. Key resistance is daily 21 MA, blue line. Key support, daily 50 MA. If the daily 50 MA does not hold, I'm looking at the 3-day 21 MA as the next level of key support. In that case, I think this falling wedge pattern will still stay intact from the downside, at least. If Bitcoin price action actually breaks out by tomorrow's candle, I do have a measured target here as far as I can read it. It's about 45.5K, okay. Measured targets or theoretical approximate targets only may actually be different in real life price action, more or less. Let's take a look into Loopring now and see what exactly has gone on since the last time I've spoken. Let's take a look into the higher time frames and see first if we have any overbought territory RSI readings or possible bearish divergence scenarios. Because if there's overbought RSI readings, this tells me that a pullback would actually not be unreasonable, okay, if it's been overheated. And if there are any possible bearish divergence scenarios, this tells me that the bulls could be losing momentum. I don't see even an RSI reading on the monthly time frame, so let's go down to the weekly. On the weekly, we are in overbought territory, about 79, okay? So some type of pullback here, I would not say it's unreasonable, okay? So this is something I'm considering. A weekly RSI reading of about 79. Let's see if a pullback comes or if the bulls can actually continue pushing this higher. On the 3-day time frame, we are in slight overbought territory. I'm not too concerned with that. And we have also made a new high on the RSI here. So there was bearish divergence comparing there was double bearish divergence comparing this high with this high. However, lower highs on the RSI, and then further again, lower high on the RSI. That's bearish divergence, indicating to me that the bulls were losing momentum up to that point. However, with this new high right now, we are making a new, with the higher RSI reading here, so the bulls have picked back up. Now on the daily time frame, I would have compared this high right here, which is a very high RSI reading of about almost 90, comparing it with this high right here, which is very low, comparing to RSI reading of 90. This would be about 65. That was bearish divergence. However, yielded with a pretty a light bearish candle here before continuing upwards. So the bulls still have momentum on the daily time frame here in the time being. And right now, the daily candle actually closes in about a little under 2 hours. If it actually closes like this or even higher, then in my opinion, we have negated any possible bearish divergence scenarios right now on the daily time frame. Okay, because then I'll be comparing this high right here, which we already do have an RSI reading of about 66, comparing with this last high right here, we did have about 64. So that's already negated if we actually do close right now or higher, which closes in about a little under 2 hours there. Let's take a look into the smaller time frames, smaller time frame here, and see what exactly could be going on. I do want to mention that from my last post, there was a symmetrical triangle pattern, and it looks like the price action has broken out of that pattern. Measure targets, as far as I can read it here, is about 69 cents, okay? Upwards of 69 cents. Now, measure targets are approximate theoretical targets only, may actually be different in real life price action, more or less. Let's take a look into hourly time frame, where I do see a possible head and shoulders pattern that could be getting negated right now. Neckline of this pattern is about, straighten up this real quick. Neckline of this head and shoulders pattern was about 47 cents. These two shoulders right here, it looks like we are making a new high right now to actually trying to negate this head and shoulders pattern. If we actually do get a higher high than that last head level right here at about 56, I would say 56.5 just to be safe. An hourly candle close above this high right here, this would tell me the likelihood of this head, well, I would completely invalidate this head and shoulders pattern once we get a higher high than the last head level right here, just to be safe, okay? So that's what I'm looking for. Now let's take a look into the bullish and bearish case scenarios. Bullish case scenario, to actually negate this head and shoulders pattern, completely invalidate this head and shoulders pattern, getting a higher high above this last head level right here. I would say about 56.5 on the hour, starting on the hourly time frame, working its way up to even the 12-hour time frame, okay? Because this pattern is still apparent, I think even just up to the 4-hour time frame is fine with me. So focusing on the hourly and 4-hour time frame, where this head and shoulders pattern was actually more apparent, and then working its way up to the higher time frames is no longer too apparent. So let me start by saying an hourly candle close about 56.5. I think that would invalidate this head and shoulders pattern, in my opinion, and more upward price action is likely from that point. And then I will evaluate and see if the price action will continue heading towards that measured target of that symmetrical triangle pattern. Bearish case scenario, if the price action gets back to this neckline right here of about 47 cents, I'll be a little more cautious. Let's take a measured target of this head and shoulders pattern right here. The measured target would be about 36.3 cents. That's a theoretical target. May actually be different in real life price action. Will we actually get there? I'm going to have to see how price action acts at each support level. And we do have quite a bit of support underneath this neckline, between this neckline and the measured target, including some fib levels, 2 fib levels, and even the daily 21 MA. So quite a bit of key supports underneath the expected breakout point. So not exactly sure if it will actually meet the measured target. Even if it actually does break down, I would just have to evaluate at each of these key support levels. But if price action actually gets to the to the neckline right here, I'll be more cautious, because that would tell me the likelihood of the breakdown of this head and shoulders pattern may still be likely. Okay. So breaking down from this head and shoulders pattern would be the bearish case scenario. Some early warning signs would be price action starts breaking some of these support levels right here. These short moving averages, including the hourly 50 and 21. I think the 4-hour 21 is also right beneath the price action. So quite a bit of support as well between the price action now and the neckline. But ultimately, I do not want to see the price action break below the neckline of 47 cents. I'll be more cautious then. Now, these are my bullish and bearish case scenarios for today for Loopring. Let me know if you found it helpful. Give me a thumbs up if you did. Let me know your agreements, disagreements, feedback. I would love to hear them. Hope you match your risk carefully. And if you would like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.